Good afternoon. It's Jeffrey Christian of CPM Group. It's about 2:40 in the afternoon on Friday, the 21st of February here in New York. I want to talk about our long-term, our medium-term, and our short-term outlooks for gold and silver prices today. We have been scrubbing our views of the economic and political environment that affects gold and silver, as well as the fundamentals of the markets very carefully in the recent weeks, and have affirmed what we think is our consensus forecast over the short to long term. That's what I want to talk about today. Before I get to that, I'm going to talk about the U.S. Treasury's gold. And I'd rather not talk about it because it's a giant distraction and a waste of time. There are any number of people who believe or are suspicious that the gold doesn't really exist, that the government has either sold it or leased it out, and there's no gold in West Point. It's all nonsense. It's all beliefs based on suspicions that fly in the face of concrete evidence. And people ought not to be distracted by this, but they are, because they have a suspicious mind, to quote Elvis Presley. That said, Trump, Musk, and their colleagues have brought this back up. And they say, oh, well, the gold's not there. We're not sure the gold's there. We're going to send Musk out there to count the bars in Kentucky, whatever. They're bringing it back up again. And that's really sad. But it makes sense given what their game plan is. The truth about the Treasury's gold is it's all there. They do annual audits by independent outside auditing companies, and they did a very deep bar-by-bar assay and audit that went for several years in the early '80s, counting and measuring each bar, checking it against the bar lists, their records, taking representative samples and having them assayed by an independent lab. So the metal's there. It's well known to be there. It's completely understood how it is there and how it's stored. It's just that some people don't want to believe that, and other people keep promoting the lie for their own economic self-interests. We did a large video on this last April, and we ran through everything. The link to that is the top link here on this slide. There were a couple true believers who wrote something about our analysis, so the following video that we did, like 2 days later, 3 days later, we responded to those comments, and that's the second link here. That's a really good place if you want to spend 20 minutes listening to all of this stuff. This is a report that was produced when Ron Paul held hearings on is the gold really there, as he was leaving Congress. We have a copy here. We printed it out, we spiral bound it, we have it in our digital database as well. I used this slide in the April 2024 view. Every bar has been counted and listed, and the assays were done on samples. Sorry that this is too small to read. This is one of the 62 pages of assay results from representative samples of bars in the depositories. And you can see how many assays are on that one page. Multiply that by 62, and you have well over 100. You have several hundred assays that were done on some of the thousands of bars that exist in the 261 million ounce stash. There were also lists, the report itself is about 270 pages long. There were also lists, 144 pages that looked like this, listing every single bar. And as I said, every single bar was weighed, inspected, checked against the bar list in the records of the Treasury, and then representative samples had assays taken. So it's there. It's known. There's no reason for people to doubt it other than psychological problems that they have. And there's no reason to claim for people in positions of responsibility, whether they're promoters of gold on the internet or the president of the United States, to promote theories that the gold's not there. They know it's there. 273 page document. I had in the April video put the link to this free report on the Treasury's Office of the Inspector General website. You could download it for free from there. I believe you can also buy a copy of it on Amazon. It's very interesting. In preparing this video today, I went to that and I initially put the link here. But the funny thing is, the report has been removed from the Treasury's website. They took it down. They don't want you to see it. Hey, if I'm going to tell you that you should be suspicious of the deep state having sold the gold down the river and never told anybody, I don't want you to be able to go to my website and see the report that says, no, it's there. We have a copy of the report. We make it available to our clients. Ron Paul, in his 2011 hearing on his way out the door, said something really cute. In his opening comments at the 2-minute mark, and you can see this on YouTube, he said, only during the preparation for this hearing was my office informed by the Mint that the Mint has, in fact, conducted assays on statistically represented samples of gold bars, and we were provided with a sample assay report. He was also provided with the full list of the bar list, and the full assay report at his hearing. Right? He said that. He never actually asked the Treasury directly, hey, have you ever assayed or audited your gold? He never went to the Treasury's website to see that the audit reports are in fact listed and posted and free and available to the public every year. He never asked. He made a lot of nasty comments about people at the Treasury not being responsive to his hostile comments in public about it. But he never actually asked them, hey, do you guys audit this stuff? And he only found out about it after squandering 20 years in the House of Representatives. Yeah, that's good. And he was one of the smart ones, he said. So, who's fooling whom? As I said, Trump talked about it last night in a speech. We're going to have the gold audited. We're going to have Musk check and verify that the gold's there. Because Musk is from South Africa. He must know what gold looks like. They're digging up these old conspiracy theories. Now, they're not stupid. Well, they might be. They're not ignorant of the facts about the U.S. Treasury gold. They know the gold is there. They know that it's audited annually, and they know that this deep review conducted in the 20s measured and verified every bar. They know that. What they're doing is they're trying to dupe people deliberately. This is part of their flood the zone strategy, pandering to every conspiracy theory to help U.S. population, U.S. citizens feel greater suspicion and anger towards some imaginary deep state government that's been robbing us blind and keeping us down. Yeah. They're duping people. Don't be duped. Don't be duped by the president or anybody else in the government. Don't be duped by the stooges on the internet. You can do it. So let's turn to what's important. We have been going over our long-term and short-term views. And our conclusion for gold and silver is that the trend for gold and silver prices is higher for the next 2 years or more, for all of the reasons that we have been writing about and speaking about since 2000, since November 2000. And those problems, political, economic, social, financial market, and the fundamentals of the gold and silver markets are growing progressively worse in terms of the economic and political environment, and they're not getting better. This is going to go on for a long time, more than 2 years. It's not going to be resolved anytime soon. And the resolution could be extremely destructive of economic values in the United States and worldwide. So, based on that, our long-term view is that investors should, people should remain long gold and silver and have a significant portion of their wealth in gold and silver to ride out the gathering storms. Right? On a short-term basis, we also do ultra short-term views that we sell to our clients through trade recommendations. And these are 1 and 2 week views. And we have been saying that we thought that gold and silver prices could rise very sharply next week. And this week too. Gold has gotten as high as $2,970 some odd dollars, $74, I think, yesterday. Our expectation is that it will touch 3,000 next week, maybe 2,990, 3,000. And that in a longer term, we do think it's going to go over $3,000. But in the ultra short term, we wouldn't be surprised to see gold at or near or around $3,000 next week. And we wouldn't be surprised to see silver at $35 or higher briefly next week. And then it comes off. They both come off, right? So that's our ultra short-term view. Prices are likely to continue to rise at least next week, possibly into March, and then they could back off. And I'll show you some reasons why they could back off. Some are political and economic. Things are pretty nasty right now. It could be that by late March, April, June, you could see a more positive political environment. Economically, we think that there'll be more signs of a likely recession, and people will be gathering in their horns. People will have been buying gold and silver in January and February and maybe into March, but they may pull back based on the economics. The fundamentals are that the higher silver prices and gold prices could lead to lower investment demand, lower central bank demand for gold. Jewelry and fabricator demand could also decline for a couple of reasons. One is the high price would cause fabricators to try to use less gold and silver in their manufactured products, jewelry as well as electronics and other applications. In addition to that, if we do see a more hostile economic environment and the prospect for a recession, people may pull back from buying so much in terms of discretionary purchases of jewelry. And you could see some investor profit taking. People who bought gold and silver earlier saying, hey, $3,000 gold, $35 silver, I think I'll take my profits. Some of them may be opportunistic and they may be saying, and then when the price of silver falls back below $30 in a couple months, I'll buy back and I'll have made $5 an ounce or whatever. Similarly with gold. And then there's some seasonality. We looked at our ultra short-term views, our short-term views, medium-term views, the next 1 to 3 years, and our long-term expectations, which go out over 10 years. And the conclusion was that we have had long recommendations, buy and hold recommendations on gold and silver, and we're going to keep those, and we're going to emphasize that they are important on a short, medium, and long-term view. The question to us is not whether or not investors should go long or short. It's whether you go long or you hedge your long position while being long. We like being hedged. We think that hedging has tremendous advantages, and that is not a belief, that it is a thought that is based on empirical evidence over the last 40 some odd years, 45 years, that we have been helping people hedge their long positions and watching them do better than people who don't hedge. And that's true for mining companies too, despite some of the misconceptions that are abroad about how some mining companies lost money on hedges. They didn't lose money on hedges. They lost money on mismanaging hedges put in place by more sophisticated, earlier financial managers at those companies. But that's a whole nother story. So gold prices have been rising really since the beginning of the year. They were $2,660 at the first trading day of the year, $2,955 a few minutes ago, 15 minutes ago when I started this video. And we think they'll probably break up to 3,000 over the next week or so. And then they might back off a little bit on profit taking, but they're not going to fall sharply because of all of the economic and political issues that are scaring investors around the world. Silver prices been testing $34 this week. It's $33 right now. It's off about 44 cents on the day. And our expectation is that it could get up to $35 next week and then maybe back off again, sort of the way it did when it went from $31 in early October to $35 on the last trading day of October, and then fell back to below $30 within about 3 weeks, 2 weeks. So those are our short-term views. Some of the reasons for that: COMEX open interest. The silver contract, the March active silver contract, becomes deliverable next Friday. As of yesterday, there were 71,765 contracts still open in the March contract. That's 359 million ounces of silver. The May contract had 74,000 contracts, 371 million ounces. So most of the 600 some odd million ounces of silver that was open interest in the March contract at the beginning of this year, at the end of January, most of that has now, the majority of it, more than half, has rolled into May. But there's still 359 million ounces to go. Some of that will be delivered. Most of it will be rolled into May. Either way, you have some upward pressures on silver prices next week as we approach the first delivery date. The first delivery date for our contract on the COMEX is the last trading day of the month prior to the active contract month. So that's this coming Friday, the 28th of February. You'll see a lot of that March open interest disappearing this year and showing up in May, this week, next week. COMEX silver inventories have risen. They're now 99 million ounces in registered stocks, 290 million ounces in eligible, 388 million ounces in total. And some of that will be delivered. You've seen 22 million ounces of silver contract deliveries during February, which is not an active contract month. Typically, you might see 10 or 14 million ounces delivered over the course of February, but to date, with a week to go, we've seen 22 million ounces. That reflects the strong demand for silver in the New York market. Now, understand, these deliveries are deliveries of depository receipts. Someone says, I'm short February contracts. Clearinghouse, here are you have my depository receipts, or maybe you don't. I have depository receipts for silver in a COMEX registry depository. I'm going to deliver those. And the clearinghouse then assigns that to someone who's long. A lot of longs, traders, will actually take delivery, see what they're getting, and then if they don't want it in the physical market deliveries, they'll deliver it to the COMEX, and they'll avoid having to put up 100% of the value if they redeliver within a day. So you will see large deliveries. That doesn't mean that the silver is coming out of COMEX depositories and being used someplace or being hidden someplace by investors or anything else. Those are the deliveries of depository receipts. And most of the metal that has depository receipts delivered stays in the depositories. So it's not a crisis, it's not an event. February was an active contract, is an active delivery contract for COMEX Gold. And to date, we've seen 7.4 million ounces of deliveries in the February contract. That's a far cry less than the tens of millions of ounces that the promoters on the internet were telling you. So that's the situation there. It's going to be resolved over the next week for the most part, and it could cause prices to be strong. Another factor to look at is gold and silver price seasonality. Now, seasonality ebbs and flows, the strength of prices. There's a certain seasonal ebb and flow to gold and silver prices, which reflects trends in the jewelry industry, the electronics industry, and investors buying and selling. A lot of investors go away in July and August, so they're not buying gold or silver. So those 2 months tend to see weaker gold and silver prices. A lot of jewelers and electronics companies buy gold and silver for their manufacturing process, or they lease it from banks that are buying it. Yes, the banks are long physical gold and silver. They don't have a naked short on the COMEX. They have long gold and silver positions that they paid 100% of the value for, and they lease it out to fabricators and others. And the fabricators usually tell them in the first quarter, hey, we're going to use X ounces in the course of this year. We think we're going to use X ounces in the course of this year. So there's seasonal strength, and you can see on the left-hand chart, that's gold price seasonality. Gold prices tend to be strong in the first 4-5 months of the year, strongest in February by a wide margin. And then they come off March, April, May, and then they come off even more June, July, August, and then they pick up in September. In silver, it's a little bit different. The strongest months are March and April, but you have the same sort of ebb and flow. So we would not be surprised to see the gold and silver prices stay strong in March, maybe even into April, but come off over the course of the second and third quarters as they typically do. Now, seasonal price patterns are easily overruled by economic and political developments and by changes in the physical market supply and demand. So something happens in the second quarter, as was the case last year, that seasonality isn't going to appear. And the gold price and silver prices actually rose in April and May of last year rather than coming off. But it's something to pay attention to because it's real, not fantasy. We will be doing our Silver Fact and Fantasies next Wednesday, 10 a.m. Eastern Standard Time. It's a free, open, online seminar where people can actually ask questions. They can send in questions ahead of time and they can ask questions during the event. You can register to participate at this website. There is a limit of how many people we can have, predicated on the limits of the program that we use to manage these online seminars. We're approaching that limit. So if you want to register and participate and plug in and listen, you probably should register soon rather than later. That's next Wednesday. And if you register for it, you will get this free report that we've been producing every year for the last 21 years on silver. We'll launch our gold yearbook, release it late March 25th, silver yearbook May 27th, and platinum group metals yearbook on the 29th of July. You may go to our website. You may pre-order those yearbooks. You may by other research that we do. There's a lot of free reads and videos there too. And you can contact us at info@cpmgroup.com and ask us questions about how we can help you better manage your exposure to precious metals and copper and commodity prices. That's all I have for now. Have a good weekend. Take care of yourself. Take care of those around you. Try to do something good for the world. And we'll see you next week.